Most people are still using the bank account they grew up with or the first one that they opened, and that is costing you money. Because if you are working towards building up your savings, you want your savings inside of an account that has a high yield interest rate on it. And most of you are probably at an account that's going to pay you 0.1, 0.02, 0.015, and that's nothing on your savings, especially if you're working towards a $5,000, $10,000 savings or whatever your big emergency fund number is. You want to have that money inside of a savings account that's going to give you a high yield. So I want to jump right into the calculator by Marcus by Goldman Sachs because it's going to show you why this is so important. So in here, I'm going to show you why it's so important to move your money into a high yield savings account and give you some examples of several different high yield savings accounts that you should consider. So jumping right into the Marcus high yield savings account, I really love this calculator because you can select several different banks. I'll just go right over here and show you. You can select several different banks and then compare how you're going to earn interest on that money depending on how much you have in the bank account. So let's just go back over here. For the initial deposit, I'm going to put it at $1. They won't let me put 0. So I'll put $1. You start with that. And then let's say you were on route to save $10,000 a year and you are going to do that bi-weekly thing where every paycheck you're going to put money into the bank. And let's say you're on that 26 pay period, 26 yearly payments for your direct deposit. And so what you're putting in is $416 every time you get paid. So I've got $416 here is my recurring deposit amount, and I'm going to change this to bi-weekly. And then we will see what happens after one full year. So after 1 year of putting $416 into the account every 2 weeks, if you were to go with Marcus, which is currently at 3.65%, at the end of the year, you will have earned an additional $189. So not only are you going to have $10,000, you're going to have over $10,000 because we did 26 deposits of $416. You're going to have that additional $189 that you've earned just by using this high yield savings account. Now compare that to if you were with something like Chase or Citibank. Chase is at 0.02%, Citibank at 0.03%. You're going to have $1 or $2. Now, $189 may not seem like a lot of money, but honestly, it's way better than earning $1 or $2 on your savings. And you especially want your savings to try to earn something on it because we know that inflation eats away at our money every single year. The cost of things go up all the time. And so using a high yield savings account can help you to combat those high inflation costs that we see year to year. I just want to show you all these different comparisons. So I've put a couple of different ones in here. We've got Ally Bank at 3.4%. So if you were with Ally Bank and if this is the rate that was going for the full year, then $176 is what you would expect to earn by the time you get to the end of a full year. And if you were putting in the $416 per year. With American Express at 3.5% APY, you would end up with $181. So this is a really cool calculator. It just gives you a really quick snapshot of if I had this, this is what would happen. So I'm going to show you one more scenario and then we'll jump into looking at some of the different banks. Let's say you already had your first 1,000 when you started this. And then you're just going to continue doing that $416 bi-weekly. After a year, you're going to have $225 if you're with Marcus, $210 with Ally, $216 that you earn with American Express. So the more you put in here, you're going to see this number that you're earning on a yearly basis is going to continue to go up. And we know that we've talked about in some previous videos, getting up to 5,000. We're getting up to 10,000. So let's just take a look at 5,000. If you put 5,000 and you're adding additional into it, then 371 is what you could possibly earn if the APY is 3.65. If you get a higher APY, then you could earn even more over the course of a year. Or if you have more than $5,000 deposited, you could earn even more over the course of a year. So I hope you are convinced already that you should have a high yield savings account. If not, I don't know what to tell you because I just showed you the numbers. But let's move on to look at some of the different bank accounts. And before we do that, actually, let me introduce myself. I am Natasha. I'm the founder and money coach at Money with Confidence. I help people to save their first $5,000 and beyond, to pay off debt, and to work towards financial independence. If any of that sounds good to you, be sure to subscribe, hit that like button. And if you really want to dig into more, then feel free to join my Confident Money Moves newsletter. You can do that by going to moneywithconfidence.com/join. That's JOIN. Okay, before we jump into the bank accounts, I do want to talk about what you should be looking for when it comes to your bank account. One thing that's important to look for is FDIC insurance. FDIC insurance is typically safeguarding up to $250,000 of the money that you put inside of a bank. So if that bank fails, your money is supposed to be guaranteed. This is something that my dad actually had experience with, where I don't know if it was more common for it to happen back in the earlier years when he was a younger person. But if a bank there was one time where the bank that he used, it failed. And so like people were all lined up in the line around the corner. He would talk about it, trying to get their money from the bank once this bank went bankrupt. And so the FDIC insurance is to protect you. So if the bank fails, you are still guaranteed whatever money you have deposited into that bank. Another thing that's important to look for when you're shopping around for bank accounts is the APY. We are going for high yield savings. We want that APY to be as high as possible so that you can earn interest on the money that you have in savings. At this point, right now in this time of history where we are, which is November 2025, you want it to be at probably 3% or higher. Okay, those are the rates that we are seeing when it comes to the high yield savings accounts. And then you want to consider fees and minimums. Ideally, you want there to be no monthly fees in regards to maintenance fees or fees to have the account. And then you also want to check on minimums. Is there a minimum amount that you have to deposit in order to open the account? Is there a minimum amount you have to maintain in order to keep the account open? The best scenario is when there are no minimums, but if the minimum is something that's doable, $100 initially, and then maybe there's no minimum after that, then maybe it's worth it to go with that account. But these are some things to consider. And then also the ease of transferring. How easy is it for you to transfer money from the bank account to a different bank account whenever you need it into your checking account? This really shouldn't be a big thing, especially in this day and age where technology is all around us. We use it for every single thing. Typically, it's still going to take about 2 to 3 days in order for your money to get transferred from one account to another. It can be quicker depending on the bank, but that's something to consider depending on when you might need the emergency money. But it's typically going to take you a couple days to get the money into a different account if you have your savings separate from your main checking account. All right, let's take a look at some options. These are in no particular order. They are just how I have them opened up on my screen. So first we're looking at AMEX. AMEX has a high yield savings account that pays a 3.5% APY on that account. It says no monthly fees, no fee to open, no minimum deposit, interest compounds daily. The compounding interest is what is so important to help us to grow our money. This is the first step to growing something. You're growing your savings, and then eventually you want to make sure you're growing your investments too, but that's very important. They've got 24/7 customer support. Let's see, transfer funds, set up auto deposits, and manage your account online. So American Express is an option when it comes to opening a high yield savings account. Previously, I've seen that you had to be a card holder with American Express in order to open the high yield savings account. I'm not seeing that here. I don't know if it's still true, but that's something to consider. This is an option for you to take a look at, is this American Express one. Let's go to the next one I've got in my list, which is SOFI. So in order to get SOFI's high interest amount, you have to be part of their SOFI Plus membership. In order to qualify for SOFI Plus, it is $10 a month. I believe that's what it still is. I will just, for $10 a month. Or if you have direct deposit, then it's free. You can benefit from the high yield savings if you set up direct deposit. Now, let's say you're self-employed and you don't have direct deposit, but you still want to use SOFI. You can still get the higher interest and the other benefits, but you have to pay $10 a month. That's One of the drawbacks is that you have to pay for it. But honestly, I'm not going to lie to you. SoFi is probably my favorite just because I love the tools they have inside of SoFi to make it easy for you. And one of the great benefits of SoFi is that you can also meet with a financial planner. I'm gonna have to talk more about SoFi in a different video, but SoFi is another option. SoFi is currently offering, what rate are they offering? 3.6%. Through this particular page that I'm on at this moment in history, you can get a 0.7% boost so that your interest rate will actually be 4.3% for a couple of months, for 6 months, it looks like. Enjoy a 0.7% savings boost for 6 months as long as you maintain your SoFi Plus membership. So if you want to join SoFi, this may be a good time to look into it. You can do that by the end of January of 2026, and you'll be able to get this deal that I'm seeing right here. So SoFi is another option. SoFi is a bank with FDIC insurance. We already talked about the high yield. There's no minimums. There are no minimums. There is the fee of the $10 if you don't have the direct deposit set up. But then there are some other options that some other offers that SoFi offers within their SoFi Plus program that may be of benefit to you. All right, let's jump on to the next one. Next up, we have Ally. Ally Bank is currently offering 3.3% on their high yield savings account. And for Ally, you can organize your money using buckets. You can set up recurring transfers. You can set up roundups. So you can round up to the nearest dollar to increase your savings. And then for Ally, they are FDIC insured. There's no monthly maintenance fees or minimum balance required. The one drawback about Ally, and maybe some of these other savings accounts too, is that there's a limit of 10 withdrawals per statement cycle. So once it goes into savings, you should not be pulling doing a lot of transitions of moving the money from the savings on a monthly basis. If you know for whatever reason you might be pulling a lot from savings, ideally that doesn't have to happen. Or in the future it may have to happen for some reason, then consider that because there's a limit of 10 withdrawals per statement cycle if you are going with Ally. If you're going with SoFi, there are no withdrawal limits. With AMEX, I would have to read through their terms because I don't think it says it right here on their site. There used to be this law where for savings accounts, you could only withdraw from the savings accounts 6 times per month. And that was paused or changed during COVID times. Some banks decided to keep that as their standard of the 6. Some increased it, like Ally increased theirs to 10. Some of them completely took it away, like SoFi. So you just have to look for that piece of information. That's something you might want to consider. Okay, moving on. So Wise is actually a fintech. They are not a bank. They don't have their chartered banking license yet, but they partner with a bank to provide FDIC insurance. You can read more about fintechs on your own if you care, but I'm not going to get into that much more than that. So with Wise, they have a 3.4% APY with their interest you can earn. Wise is nice because they also have like the vaults that I've shown with SoFi. They have or buckets like Ally. They have something called jars. So like when you put your money into your savings, you don't have to just have one big pot. You can break it down into, okay, this money in this jar is for my emergency fund. This money in this jar is for my travel fund. This money in this jar is for my car maintenance fund, or whatever funds you need. You can break it down into jars inside of Wise. So looking at, and the other thing is great about Wise, if you're an international traveler, because Wise does like international money transfer, then you can easily pay for stuff in the currency of where you are using the Wise card and everything. If you have people internationally, you can send money through Wise. Those are just some different benefits of Wise. But with the banking portion, let's see if they tell us. So it says that FDIC insurance through their program bank of $250,000, instant access to your money. Let's see, are there fees? This is what we're looking for right here. No fees for opting into this is talking about the interest. But I do not believe there is a monthly amount for this particular account that Wise offers, the thing that you would want to look into if you were to go with Wise is the transfer. What's it going to take for me to transfer my money away from here to somewhere else if I need to transfer it? Let's move on to the next one. We've got another fintech, which is Wealthfront. Again, fintechs are like technology companies that build for the financial industry. And then they may partner with a bank in order to provide that protection on your money. Okay, that's all I'm going to say about fintechs for today. So Wealthfront is offering a new welcome offer of 4.15% for the first 3 months. And then after that, 3.5% on their savings. And it looks like there are no account fees, 24/7 instant withdrawals. So it seems like you can access your money very quickly. It looks like you can get up to even more money insured through some type of program they have here. So there you have it. Wealthfront is another one of those options. And normally when it's a fintech, they may call it a cash account versus a checking or a savings account because they're not actual banks. They are fintechs. It does say no monthly fees. All right, let's move on to the next. Next, we've got Bread Financial. Bread Savings is currently offering 4.2% on a high yield savings account. They're just highlighting some other things that they have. 4.2% on a 6-month CD and 3.75% on a 1-year CD. So this, I think, is the highest rate we've seen of all the banks so far. So Bread Savings has this higher yield. If you want to check out Bread Savings, let's see if they tell us what it takes in order to do it. Open with $100 or more. So there is a minimum to open this account with $100 or more in order to earn the 4.2%. But then it says no maintenance or hidden fees. They have FDIC insurance as well. So Bread Financial is an option. One thing I will say about the high yield savings account. I used to be someone who was chasing high yield savings. Actually, back then I didn't know about high yield savings. It was a high yield checking account. And I used to be chasing high yield checking accounts. Oh, I need to change. This one's higher over here. This one's higher over here. I don't do that anymore. So even though my savings account may not be the highest out of all the options that exist out here, I'm not chasing the highest high yield savings account because where I'm really trying to grow my money is investing. I'm trying to invest in other things that can grow at a much higher rate than the interest rate that a high yield savings account will give to me. So just because a yield is higher doesn't mean you have to go with that bank account. You really have to think about all the features that it's offering and if it makes sense for you to go with that one over a different one. So I've showed you a couple of different options today when it comes to the high yield savings accounts that you could use, some fintechs, some actual banks. There are plenty more you can search for and find. The most important thing is to get your money into a high yield savings account. Okay? I will see you guys in the next one. Thank you for sticking around with me for this series. If you missed anything in this emergency fund series, please go back and watch it. This is part 4 to a 4-part series. And if you want to get to 10,000, this is the series you need to watch of how to get there. Okay? I will see you in the next one.